Good morning and welcome to this Monday, April 19th, 2021 edition of Trading Places Live here at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist at Earnings Beats, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. Well, looks like as we start off this Monday after options expiration, we could get off to a little bit of a rough start. And that's not unusual for the market, by the way. Typically, we do see the market struggle into options expiration and in the start of the next week. In all of my studies, the absolute worst day of the calendar month is the Monday that follows options expiration. So today, futures aren't down that much. NASDAQ getting hit a little bit harder, but the Dow down 45, S&P down 8, NASDAQ down about 60. Which is about 0.4%. So it does look like we'll get off to a little bit of a rougher start this morning. But it's really going to be hard to hold back the bulls. I mean, these numbers that are coming in for earnings, just absolutely spectacular. And I know it's early in the season, but things have really gotten off to a very, very good start. So we're going to get through all of that in just a moment. But first, let me take you over to Earnings Beats. And for those of you that are new, love to have you join. Just your name, email address, hit that subscribe button. That will subscribe you to our free newsletter, our Earnings Beats Digest, which is published 3 times a week, Mondays, Wednesdays, and Fridays. Love to have you there. There's absolutely no charge, no credit card required. You can unsubscribe at any time. It's really just an educational newsletter designed to teach you some of the things that we look at Earnings Beats, the way we approach the market, relative strength, the earnings reports, that sort of thing. And occasionally, I think there's some pretty nice trading opportunities in those articles as well. So just type in your name, email address. Love to have you join. All right, let's move on to what happened last week. So we closed out the week with the Dow Jones up 165 points. The S&P was up 15. NASDAQ was up 13. But on a relative basis, you can see the Dow and the S&P on a percentage basis did better than the NASDAQ to close out the week. Mid-caps, excuse me, mid-caps actually went up 0.75% and broke out to an all-time high on Friday. So I don't know if you caught that, but the end of last week, very strong for mid-cap stocks. Small caps still trying to get going again after a really strong run up through mid-March. We pulled back just as we did with the mid caps. But if you notice, we went back all the way to the prior low on the small caps. The mid caps did not. And now we're starting to make this move back up in the small caps, but clearly lagging the mid caps move. All right. As far as sectors go on Friday, materials led up more than 1%. Really nice chart. Hard to argue with materials. I'm not a huge materials fan, but hey, when the trend is in your favor, you stick with them. Right now, materials doing extremely well. Some of the earnings reports I expect are going to be very strong in this group as well. But materials breaking out, see again up that 1.2%. Utilities also strong, along with consumer discretionary. But across the board, you can just kind of see everything, even energy, which was the weakest group on Friday, still holding on to price support and right at about the 50-day moving average. Nothing horrible technically. And that's the way it is across the board. All of our sectors, most of our industry groups, they're either bullish, breaking out, or they've pulled back. They're still in, for the most part, defined uptrends. Market looks great. Aluminum, I mentioned this in one of the webinars last week. This has been the best area in 2021. It broke out again, a huge move on Friday, up 8.5%, breaking out above that 120 level. Back at the beginning of the year, or even the latter part of January, so well into the beginning of the year, we were at 60 on the low, just below 60. Now we're over 120. So we're talking about 10 weeks doubling. Aluminum has been very, very strong. All right, 10-year Treasury yield. Let me give you an update here. There's no economic news out today. In fact, I was looking ahead. I don't see anything in terms of key economic news until Thursday. So bond market's going to be trading without a whole lot of economic news to trade off of. But nonetheless, you can see that negative divergence that we kept talking about, where it looked like, at least to me, the 10-year Treasury yield could be headed for 150. We got down to about 153. And then we've bounced the last couple of days back near 160. I expect we're going to consolidate here, especially with no economic news out. I don't expect any huge moves one way or the other. The big news this week is going to be the continual increase in the number of earnings reports that we get. So that'll be really important as we go throughout this week and next week. Some of the really big tech names are going to be reporting next week. This week, still a lot of the Dow stocks and some other large companies as well. I don't know if you really pay that close attention to earnings season, but it tends to start off with a lot of the big banks that report. And then once you get past the banks, then it's other large companies. And as you go throughout the earnings season, it's almost like companies get smaller and smaller, probably because their accounting departments are not nearly as big, and it just takes them longer to get their numbers ready to release. But for whatever reason, that's how the market tends to unfold throughout earnings season. All right, in the news, wanted to mention just a couple of stocks this morning. Tesla. So police officials are checking to see if Tesla's autopilot system was engaged during a deadly Texas accident over the weekend. I don't know if you heard about this, but 2 people were in a car. The car ran off the road, wrecked, caught fire. Both folks inside the car were killed. But the part that was kind of weird was when the police arrived on the scene, there was no driver in the driver's seat. There was someone in the passenger seat and there was someone in the back seat, nobody in the driver's seat. I just kind of shook my head. I mean, I don't care whether the car's on autopilot or not. I'm sitting in the driver's seat. I'm not going to get in a car without somebody in the driver's seat. But anyhow, it was a horrible accident. And Tesla is down $17 this morning as a result. And I'm just sitting there thinking, why is Tesla down? There's nobody in the driver's seat. I mean, they do have an autopilot system, but they still say that you know, in their manuals, drivers should be assisting, even when you do have the autopilot on. Anyway, I just wanted to report. The stock is down about 17 pre-market. Keep in mind that 20-day moving average. We did break up above it. We've been trading above it, and that 20-day is at 696. So the $17 would take us down to 722 roughly. So we're still well above that 20-day moving average. I would watch the 20-day because I think Tesla has started to trend higher heading toward its earnings. So any kind of a pullback I would use as an opportunity unless it struggled to hold on to that 20-day. The other company, another warning issued here, this is on Peloton. So Peloton, the Consumer Product Safety Commission, issued a warning after a series of cases involving children injuring themselves on Peloton's equipment. Well, again, Peloton in their manual says to keep children out of reach of the things and, you know, out of the reach of their treadmills and so forth. And so they're kind of disputing these claims, but nonetheless, again, sometimes all it takes is a news story. Peloton was down $6 or $7 this morning, and that would take it back below its 20-day. So here you've got a stock that's broken above the 20-day, got to the 50. This could be rolling over. Now, I would keep an eye on not just what happens at the open, but keep an eye on what happens throughout the trading day, because Peloton, even though it's been going through all these struggles and consolidation and weakness, that AD line earlier this month was setting a new high. So there might be some weakness in the morning, but typically by the end of the day, we have buyers on Peloton. That's how that AD line stays up so high. So again, we're getting this sell-off in the morning, but do we rally this afternoon? I think that's important to watch because that to me is a difference between a stock truly being distributed or a stock that's being accumulated. And so far, the AD line tells me Peloton during weakness has been accumulated. So keep an eye out for that. I mentioned Monday after options expiration tends to be rough, so we do want to keep an eye on that as well as we open up the week. If you're looking to buy stocks, I would say generally speaking, as you move later into the week, probably it's going to be better. Also, though, we are in earnings season, and sometimes earnings season, the bull market, you know, that bull just puts its head down and just runs over anybody getting in the way. I've posted articles showing how the first half of a calendar quarter is much stronger historically than the second half. We're in the first half of this calendar quarter, April 1st to May 15th. So earnings tend to drive the market. That's, you know, throw earnings and interest rates and or Fed policy out there. That's really what drives the stock market over time. And earnings, I'm telling you, we're going to go over those in just a bit, but the earnings have been absolutely unbelievable, just fascinating. All right, let's move on to talking technically. What I wanted to do in talking technically was just give you a brief update on some of the global markets. You know, I talk so much about the US, and I'm not an expert in foreign markets, and I don't try to be. So I just look at the overall indices, see how they're performing relative to the S&P, but I don't spend much time going in looking for individual stocks, you know, across the pond or anywhere across the globe for that matter. But I did want to just point out, because I think it's important that you understand that we are in a secular global bull market. This is a global secular bull market, not just in the US. German DAX had consolidated here, you can see, for 3 years trying to get through that 14,000 level. We just did that here over the last 6 weeks or so. And the DAX is going straight up. Now, the significance here, and I follow this more than any other market around the world other than the US market. And the reason I do that is when you look at the long-term correlation between the DAX and the S&P 500, it is as strong, if not stronger, than any other country around the globe when you look at their correlation with the S&P 500. So if I'm interested in US stocks, I want to see what's going on in areas that are highly and positively correlated to the US. Germany is that index. When you're looking at global markets, I haven't found any that are stronger. And I'll show you some others here in just a minute. But I think this is the strongest. And if we just drew a line at like the 0.75 level, or maybe that 0.5 level, that's positive 0.5. That's telling you that these two indices stay in that 0.5 area and above the majority of the time. It's rare when we dip, and when we do dip, we tend to come right back. So if they do vary for a period of time, they tend to go back lockstep, you know, hand in hand together again. So important, I think, to realize that the DAX has broken out and it's in this straight up move. Look at that weekly PPO pointing straight up. There's no signs of momentum slowing. So that's something that's really important to understand when you're also looking at US stocks. Let's take a look at China. Now, this is the one that I would pay the least attention to when I'm trying to figure out what's going on in the US. If someone says, oh, well, this, you know, China's having this, or China's going through these issues, and that means the S&P is going to come down, pay no attention to it, because history tells us that's not the case. Now, is there more positive correlation than negative? Yes. When you look back over the last 10 years, I would say that we're in positive territory, certainly more than negative, but not like what we just saw with Germany. Let me show you Germany again. See, I mean, we barely ever even go into negative territory. And then you go into the China, and you can see throughout the last 10 years, many times we've gone negative. And if you drew a line at the 0.5 level, it might be 50-50. It might not even be 50-50. It might be that the correlation is below 0.5 more often than it's above. So, you know, there's got to be some positive correlation. I mean, if our economy is strong, that's got to help companies in China that are selling to us, and vice versa. So there's got to be some positive correlation, but the correlation here is nothing with the US compared to what Germany's correlation is. Nonetheless, though, I will say, when we look at this, China just recently did break out to its highest level that's seen back since the end of 2015. So we do still have some very bullish action taking place here. Then we go to the Hang Seng. And the Hang Seng, I think you'll see pretty good positive correlation, not as much as, not as positive as Germany, but pretty solid. Not as weak as China, so kind of in between somewhere. But look at the trend. We haven't taken out the early 2018 high. That still is sitting up there. I think you're going to see it before the end of the year. But right now we've got this move up. We've pulled back. I actually like this pullback to the rising 20-week moving average, very similar to what we saw the NASDAQ do just recently. So another one that looks pretty good to me. And then we've got the Nikkei in Tokyo. Huge breakout here, taking out this triple top. That occurred back in the fourth quarter of 2020, and we just continue to power forward. Pretty solid positive correlation here as well. So to see the countries that are so tightly positively correlated to the US showing such strong action, to me, just adds to the bullish confirmation of what I'm seeing in the US charts. It's not just about the US, it's a global secular bull market that is underway, and that's pretty exciting. All right, I'm going to move on to commodities. I don't look at commodities very often either, especially when the dollar's in an uptrend, but the dollar has been weak of late. I think it just set a 6-week high, or excuse me, a 6-week low. But anyway, gold has been in this downtrend for a while. This is a longer term 5-year weekly chart on gold. Now, I'm going to move to a daily chart and I'll come back to this. I want to show you on the daily chart, because I think short term gold looks pretty good. But you want to be very careful with gold in the event that this short term doesn't pan out. Now, there was a pretty good support level right here at about 1775. We went below it, struggled. At the end of last week, we came back up and got just above that 1775 level, closing at 1780. But it is still in the midst of this, what I would call an intermediate downtrend, intermediate term downtrend. So if we do continue to hold this move to the upside, I would watch, number one, most important is going to be this rising 20-day EMA. I don't want to go back below that. And the reason I don't want to roll over on the daily chart is because we are at that level on the weekly chart where it would suggest that we are going to roll over. And the big picture, I don't want to lose sight of what's going on in the big picture. We had a nice uptrend through the middle part of 2020. We had all that fear. And now as the fear comes out, money rotates into stocks because earnings are exploding. Interest rates, even though they've gone up, are still near historic lows. It's a great environment for equities. And usually a great environment for equities is not a great environment for gold. And so, but a lot of that also depends on the dollar. It's not just about the economy. We need to see what the dollar is doing. But gold downtrending, coming up, testing its 20-week EMA from underneath. That's why if you're going to take that position on gold in the short term, just be really careful if it starts to roll back over. I would not have a very long leash on gold. And I could go back and show you, we can take a look at the gold versus the S&P 500, go back 10 years and put this on a line chart. And I think it's pretty clear, gold relative to the S&P 500, you see a big opportunity here versus the S&P 500. In other words, you can invest in the S&P 500 in stocks, or you can invest in gold. You got a couple, there's a choice. Look at what gold's doing relative to the S&P. Wildly underperforming. So just because it's starting to show a little bit of a breakout, again, I'm okay in the near term with gold. It's starting to show a little life, but don't lose sight of the big picture on gold. Don't lose sight of this relative weakness, because this has not been an area where you've been outperforming the S&P 500. And even with that short-term uptick in gold, it's just kind of still trailing the S&P 500. S&P 500 is going up faster. So keep all of that in mind. All right, let's go back to gold here, and let's pull up silver. So silver, and I'm just going to go back to that 5-year candlestick chart. So silver, nice move up, sideways consolidating. I'm okay with it. We're just kind of in the middle of this range on a weekly, 5-year weekly chart. I like it better if it were down around 23 with maybe a dollar stop below that, 22. Sitting at 26, kind of in the middle. Here's the dilemma with commodities. First of all, what is the dollar going to do? If the dollar looked like it was strengthening, now it's rolled back over and it's weakening again. If the dollar strengthens later this year, and I'm still betting on that, then I think commodities are not where you're going to want to be to outperform the S&P 500. If the dollar continues this recent downtrend, however, then I think you've got much better opportunity for commodities to perform well, at least as well as the S&P 500, if not better. So a lot of this is going to come down to the dollar. The long-term chart here on silver, to me, still looks pretty good. Copper, this is where I think this is the important one, and I think this is where we go higher. Copper is more directly tied to the global economy. When the global economy is strengthening, the demand for copper accelerates. And long-term copper, and I haven't looked at this in a while, but let's go out 20 years on the price of copper. And I'm also going to show you the correlation on copper versus the S&P 500. So if we pull this up, it's a weekly chart. I mean, you can see that we spend most of our time in positive territory. It's not a 100% positive correlation here with the S&P 500 because copper can be directed a lot by what's going on in China and India and less than, about what's going on in the US. But when global markets start to strengthen like we're seeing, the tendency is for copper to do extremely well. We're getting close to this high, which is up around 470 or so. I think we're going to go through it. I think we're going to go through it either this year or next. And I think it's going to coincide with global economic strength and with global markets breaking to new highs literally around the world. So that's why I'm bullish copper. It is more closely tied to the economy than the others. And it's in a much better trend, to be quite honest. I love what's taking place here in copper. And I think any pullback is an opportunity. All right, how about chart lists? So I just want to let all of our members know. Actually, no, one more thing before we get into the chart list, because I did want to show you a copper versus gold chart. So here's copper versus gold. And look at the correlation between the direction of copper versus gold and the S&P 500. Look at the positive correlation. We're mostly in positive territory the last 5 years. And again, when the S&P 500 is doing well, that's a tendency to suggest anyway that our economy is going to strengthen. And that tends to bode well for copper versus gold. Gold does better when there's fear. When the economic outlook is more cloudy, that's when you're going to get more interest in gold. So this relative chart makes a lot of sense to me and is one that I follow from time to time. All right, chart lists. I just want to make sure everyone is aware there was a number of chart lists updated for our members over the weekend. If you're not a member and you want to try our service for 30 days, you can always do that. Go back over to Earnings Beats and click on this Join Today button. You get a 30-day, $7 refundable trial. So you pay $7 up front. We refund it to you within a week, and then you can enjoy our service for 30 days, essentially no cost. But in that service, if you're also a Stock Charts member, extra or above, we do a lot of research. I look at Earnings Beats as a research platform, research and educational platform. And all the research we do, here are the strong earnings charts. This is just one of our 2 chart lists. We actually have a second strong earnings chart list. And all of these companies, I've done research on them. They've beaten Wall Street estimates. And then we go through and we annotate what I consider to be some of the key support levels, 1 or 2 usually. And then we just hand them off basically to our members. Our members can download these. We provide links at our website. You literally click the link, type in the password, drop it right into your Stock Charts account. It's pretty cool. Anyway, strong earnings, both of our strong earnings chart lists were updated over the weekend. They should be available on the website now. Also, raised guidance chart list was updated. So you've got that. Last week, we didn't have a whole lot of earnings, although earnings started to kick in at the end of the week. But this week, we do have the earnings listed now, upcoming earnings. So all of those chart lists for the upcoming week are available. And so got a lot that we were able to, still having a problem, by the way, with the strong ETF chart list. I don't know what's going on. I've deleted it. I've retried it. And it's still, for whatever reason, we've been trying to figure it out with stock charts. But for whatever reason, you can still go through and review the charts. And there are only 50 of them. So it's not as much as like on the strong earnings where we have over 500. So you can still view them, but it's not in a chart list form that you can download for whatever reason. Again, I cannot figure out why it is not working. I set everything up, link everything exactly the way we do with all the other chart lists, but for whatever reason, that one is not working. And I'm going to keep trying to mess around with it. But anyway, that one is struggling. But I just wanted to point out that these chart lists have been updated. So for instance, all of the anybody that raised guidance over the past week, I think there were about 15 or 20 of them, were added on. So you can see companies like SolarWinds, which was which raised their guidance last week. Then you got Perkin-Elmer raised guidance. I mean, we go down the list. Bruker. I'm trying to find one that did really well. Well, here's Bally's Bowley had a big move up after it raised guidance. And what I do here is I put this vertical, this black dotted vertical line in where the upgrade came out timing wise. And then I put in a support level to watch based on how the stock is trading currently. But all of these have been updated for last week's raised guidance. Any companies raising guidance. Tegna, TGNA raised guidance, broke out. I think this information is really valuable in terms of trading and investing longer term. All right, let's move on to earnings. I wanted to get out first the chart on Coca-Cola. Coca-Cola was up slightly, I think, in pre-market. I can check that in just a second. But you can see the stock trying to put in the right side of this cup. Didn't quite get up here. And the uptrend, I mean, this cup is almost pretty deep relative to the uptrend. So I don't personally think I would play this as a cup and handle, but some would. I mean, you can see the cup, you can see the handle. If you call this cup and handle, that's fine. I tend to be pretty strict with these patterns. So this one just doesn't quite measure up for me. But a breakout above 54.5, 55 would be bullish. I don't care what you call it. 52-week high is bullish. And watch to make sure that volume confirms. But Coke did beat top line, bottom line, 55 cents versus 50. So, you know, we are still continuing to see very strong reports. And there's Coca-Cola up 40 cents pre-market. 4 minutes to go here. The other one I wanted to show you is Harley Davidson. Harley Davidson, look at this pattern, uptrend. You see all these tops, the bottoms, you can call it a double bottom. Maybe you could call it a slightly higher bottom. So maybe you're not, well, kind of like an ascending triangle, but not quite. Usually what you see with the ascending triangle is a high, which is point A. Point B is trend line. C, you should get up here to the high. We didn't get that C up to the high. And then we come down and print this. So you have the upsloping lows, but in between those, you should have a test of the high and for an ascending triangle. So again, somebody looks at this and says ascending triangle. Technically, it's not, because the pattern, we don't see that, you know, A, B, C back up to the high. But anyway, breakout would be bullish. Well, we're going to get that breakout. Looking at Harley Davidson, the stock's up 9% pre-market. So listen to these numbers. And anybody who's following PE ratios and says the market's overpriced because of PE, we're getting so many companies to report earnings like this. Harley Davidson was expected to earn 79 cents. They earned $1.68. You know, don't throw these PE ratios out there as the reason why the market's overpriced. The PE ratios, the earnings part anyway, is understated. These earnings are going to be so much better than what the market is forecasting. And then all your future estimates get raised. And as a result, all of a sudden, the price, when you divide it by these future earnings, is not what it seemed to be. It's not overpriced, not in this environment. I keep saying this. I've been saying it for a year. But earnings continue to go up exponentially. And there's no end in sight. If anything, we got stimulus coming. We got the Fed being accommodative, saying that even if inflation goes up for a period of time, we don't care. We're not raising rates. They're beating us over the head. Now the earnings are coming in. What drives the market? Earnings and Fed policy. I mean, it can't get much better. All right, I'm going to go into the three you must see, and then we'll wrap this up. First up, ARWR, Arrowwood Pharmaceuticals. Looking at the chart, you might not think too much. I mean, you know, we did get back up above the 20, which I like. You know, we were downtrending. So these stocks that were previously uptrending and then went through a period of consolidation, when they get back through the 20-day, that's the first sign to me that maybe they're starting to rebound and begin a new uptrend. One thing that's critical is this double bottom with the high in between serving as resistance. If we can break above 70, that would be the next step. We've gotten through the 20, breaking above 70 would then confirm this double bottom pattern, and then becomes the 50. It's just a stair step, one after another. Next stock, ESTC. This is Elastic. Another one that was downtrending, but now has turned back up again near the 50, pulling back on Friday. Watch that 20-day moving average. The AD line still near the high. So I think this 20-day could hold and we could see a rebound back to the upside. So watch ESTC. Last one is one I mentioned last week. I still like the stock, even though I had a rough Friday. I didn't go back and look at options. I have a feeling that options were a culprit in why Cloudflare Net was down last week. Look at the AD line. I mean, it has not budged from moving straight up. So even though we've been consolidating these last couple months, it sure looks suspicious. Looks to me like we could be having some accumulation. Watch for a break above 80. We can't get to 95 without getting through 80. So 80 would be an important level because that's where we had gapped down from here, and that's where we've struggled on the way back up so far. The other more aggressive entry would be kind of where we are on this 20-day test, assuming that we've now moved above the 20. We're going to make a pre-earnings run, and the 20 days going to hold. This is an area that I would be interested in on Net or Cloudflare. It is the more aggressive approach. So more aggressive investors that are trying to catch the bottom might look for this 20-day. Otherwise, you could sit back, wait, and see if we get that move through 80, see if the volume starts to come in, and then get in. You have to give a little bit of room down to the 20-day, but that to me would feel a little bit more like a bottom is in. All right, that's it for me. Market just opened. Let's get a quick update on what's going on here. Dow down 55, S&P down 5, NASDAQ down 52, small caps, mid caps, both down fractionally, not much at all really across the market. VIX up a little bit. Again, Monday after options expiration, don't expect a whole lot. Keep that bar really low as we start this week. If we go up, we go up, but just keep in mind, historically, these next couple of days are when the market tends to be weak, and you'll hopefully have an opportunity to get into some stocks a little cheaper as we move throughout the balance of earnings season. Everybody have a great day. Be back tomorrow over at Stock Charts TV for the recorded version of Trading Places Live. That'll air tomorrow on Stock Charts TV at 9 a.m. Eastern. Everybody have a great day. And by the way, tonight, 4:30, we've got our next draft on our ETF portfolio, model ETF portfolio. So if you're a member, that will be starting at 4:30. If you're not a member, a trial membership gets you in for that draft where we try to outperform the S&P for the next 90 days with a basket of ETFs. Everybody have a great day. See you this afternoon. Happy trading.